So this is a simple explanation of what an income statement is. As you can see, an income statement is a summary of a business's revenues and expenses over a period of time. So this is actually very simple. It is anything that says revenue minus anything that says expenses, and then you determine if you have a profit or loss. If you're struggling a little bit, you can go into more detail that revenues are product sales, and expenses have two categories. There is either direct or indirect expenses. Direct expenses are cost of goods sold, and then you can know if you have a gross profit or loss in direct expenses. And then there are indirect expenses, which are overhead expenses, and that will give you your operating profits or loss. And we'll probably get into that more in the semester. So some of the indirect fixed costs are rent, salaries, insurance, administration, accounting, marketing, legal matters, depreciation, and amortization. This just shows that there is a variable with revenues and expenses, and to be aware of those when you are calculating your profit or your loss. Now, to get into the actual problem, let me share my other screen. So here is our problem. My numbers are going to be different than yours. Here's how this income sheet is set up. First, you're going to need to pick the date. Now, this is a date for a period of time. So we have for the month ending in December. That is the correct time frame. We're doing a period of time, not one point in time, but a period of time. Next, your first thing that you're going to want to list out of your options is your revenues, because all we're dealing with are revenues and expenses on our income sheet. Next, you want to look above and you're going to look for anything that says revenues with it. The only one I found was consulting. So you're going to put that in right here. And then, of course, you're going to bring the number from up here. Let me highlight it. We've got consulting revenues right here. I bring this information into these cells under revenues, and it totals it up for me. Next, our options are expenses. So you want to make sure you hit expenses in this row. Then we're looking for anything that says expense, and they've really nicely laid out expenses right here on the right. There's not a way to highlight each one. There we go. So rent expense, I put that here. I put the amount. Then salary expense is the next one I see. Let's see if we can highlight that one. So I can make sure I put salary expense and the exact amount there. And then I have telephone expense up here. That's going to come down here. And I have my miscellaneous expenses. Make sure I click that option in here. And then I enter the amount in here, and I'm going to get total expenses. And then at the very end, what we are calculating is a net profit or loss. And in this case, $27,100 minus $16,930 gives us a positive number. So I know this is a net income. However, if this was a negative number, I know that this should be a net loss. So that's number 11 for us, and we will go on with the presentation. The next statement that we are dealing with is the statement of retained earnings. You have to do the income statement first because you will be using the net income as part of this statement. So first you have to do the income statement, then second you can do a statement of retained earnings, which is a financial statement that reports changes in retained earnings of a business over a period of time. Retained earnings are referred to the income that has not been distributed as dividends to its owners. This is the income beyond operations, beyond inventory, beyond what gets the business going. These are the earnings above that. And with these, they get to go to the owners and to those that own the company in the form of dividends. And dividends are a transfer of some or all of the business's earned assets to its owners. So on this sheet, there will be the retained earnings, the net income, which we just calculated on the income sheet, dividends, and that will calculate the retained earnings. So let's look at the actual problem. Let me change my screen share. So your problem will look something like this. And down here you will have some options. This is another one again that is over a period of time. So you'll need for the month ending in December. You will need to put retained the net income in here. And that is from the previous problem, which in my formula was 10,170. Your numbers are going to be different. Once you have that, then you're going to look at dividends. And dividends happen to be right up here on the formula. So there are dividends. I put the dividends amount in right here. And then I have my retained earnings as of December 31st. Now, note, we did not start with an amount. This was a new account. So we started with 0. Sometimes there will be an amount here at the beginning of the month that changes over the next month. So if we went into January or into another month, there may be an amount here. So pay attention to the question and if they give you an amount to start with or not for the beginning of the month or the time period in which you are doing this statement. And our final problem, number 13, can only be completed after you've done your income statement and your statement of retained earnings, because you need your net income and you need to know your retained earnings in order to do this sheet. And so we have our balance sheet, which is a financial statement that shows your business's activity at a particular period of time. This is different, not over a period of time. This is at a pinpointed period of time. And that's where it's going to be a date as of instead of the month of ending in. So that's the first thing you need to make sure is that you have the right process for the date here. Now we have 3 areas on the sheet that we got to pay attention to. We have assets. That very simply is put what the businesses owns that has a value or a dollar amount. And then we have liabilities, which is your business's financial obligations and debts. And we have equity, money held by your company. And here are some of the simple things that are listed. They're not exactly the same in our assignment, but it gives you a general idea of what would fit into these categories, which include for assets, money in an account, money in transit, accounts receivable, short-term investments, inventory, prepaid expenses, cash equivalents, land, buildings would be considered part of inventory and assets as well. Liabilities is accounts payable, wages, loans, anything on credit, including credit card debt or bonds, things that will need to be paid either immediately or over time. And then equity is money held by the company. That's capital, that's stocks, that's our retained earnings that we just calculated. These are things that help keep value in the company. And once we have all of these, we have a total of what the balance is for this business in a particular period of time. This is a way to assess how the company was doing at a period of time. A company may use this for a holiday season to see how they did during a holiday season, or a peak season for their business, depending on what the business is and what services that they provide. And that's how this can be helpful for a comparison versus over a period of time. How did they do on a particular day, a particular week, or a particular holiday or season? And that's what that would be used for. All right, let's go to the actual problem here. Switch my screen here. And here we have our balance sheet. So the very first thing that you're going to notice is different here is you're not going to put as of the month of December. You're going to put as of the day of December 31st. First, you have your assets, and they're nicely listed up here pretty much in order from cash. Your cash amount would start first, and then accounts receivable is next. Our office supplies is after that. That goes right down here. And then we have office equipment. These are all considered inventory and assets for the business. Make sure the numbers match. Our land is an asset. That's something that has value and will build value over time. And then over in liabilities, only liability that I was able to see was our accounts payable. There may be many other options in here as well. If there was another account that needed paid or those kind of things, it would be in here as payable. So watch for those. And then we have the amount here. And in equity, we had two options for equity here. We had common stock, which is listed right up here, the amount. And we had the retained earnings that we just calculated from the previous sheet. So these have to go in order for you to get the correct answer. Your numbers are going to be different than mine. Just make sure that they match from up above. So this one came from the previous sheet that we just did. And then at the end, we have our total equity and we have our total assets, our total liabilities and equity here. Let's see. Oh, this was an incomplete answer. Ooh. Total assets and liabilities, I believe. No, it was be total liabilities and equity because our assets and our total liabilities and equity need to equal each other. Then you know you did it right. So you should have the same number on the left side and the right side for you to have the complete correct answer. Feel free to correct me if I'm wrong, but I believe this was done correctly. So feel free to give me any feedback. I hope you found this helpful and good luck. All right. Have a good one.